talk about PNB. The 11,000 crore fraud at Punjab National Bank has brought to light systemic and operational risks in the Indian banking system. This also taints the assessment risk at state-owned lenders where contingent liabilities remain high. In fact, according to calculations by Bloomberg Intelligence, Indian commercial banks' contingent liabilities far exceed their assets. To discuss this, let's welcome in Diksha Gera of Bloomberg Intelligence. She joins us from our studios in Singapore. Diksha, thank you so much for joining us. Your report specifically points to the risks caused by high contingent liabilities. What could those risks be? Can you explain that?
Yeah, hi Harsha, thanks for having me over. So basically there are two things here. One, if you see, the Punjab National Bank contingent liabilities did not even reflect this exposure. So that is one part of it. So if you looked at their funded exposures to the gems and jewelry sector and the unfunded exposures, none of them were as big as this number was. So that is one. Secondly, on an aggregate basis, the Indian banking sector's contingent liabilities are higher. They're about 107% of the total banking sector assets. Now, the thing with this is that if these were to materialize, which is like a tail risk event, but if they were to materialize, it could wipe off the entire asset base. So just by the level of that number, it's quite surprising, like it's quite a high number.
If you can explain how one should see contingent liabilities as a percentage of total assets to understand what the risk is that may be hidden in these balance sheets?
So actually, there is no specific metric that you can actually measure. So contingent liabilities are event-based liabilities, right? So normally they don't reflect on your balance sheet itself, which is why you got to put it in context in terms of how much risk you're holding onto the book. So that's where I'm coming from. So like if in an extreme case these liabilities were to crystallize, how does that impact, like if you know the demand on those on these liabilities were to come through, how do you fund them? How do you pay those out? So that is why I compared them with the assets on the balance sheet.
You also go on to say, Diksha, that foreign banks may come under scrutiny as well, as in the sense that they will also draw the attention of the RBI. On what basis are you saying that?
So while I was looking at this incident, I kind of went on and compared all the different banking forms in India, like looked at the state-owned banks, the national private banks, the foreign lenders. And it was quite interesting to me that even though the foreign lenders just had about 6% of market share on total assets, their contribution towards the total contingent liability of the banking sector was 49%. So that tells me that, you know, even though they're contributing very little in terms of balance sheet business, they are very high in terms of the contingent liabilities that they're holding on their India business. And if you think about it, that gives you the first information is that they do a lot more fee and forex business than the actual balance sheet lending, which the core brick and mortar public and private sector banks in India kind of do more. And secondly, on the numbers itself, like bulk of these are generated from forward contracts. And, you know, one could argue that these are notional amounts, less likely to crystallize. But that's true for most contingent liabilities, actually. These are not supposed to crystallize. But then we're talking about tail risk events here, right? What you saw with Punjab National Bank. The other argument you could also make is that there is a need for an accounting, there's an accounting standard issue here. So you report the notional amount of your contracts as part of your contingent liabilities. They are technically reported higher as well. So we need better standardized measures of risk assessment in that case. So that was the point I'm trying to make here.
Sure. Diksha, just last point, your note then goes further to talk about the possibility, the perennial possibility of mergers between the state banks. And you know, in the context of what has happened, you once again make the point that it may not be prudent.
Yeah, so I think, there is obviously a lot of merit and positive arguments in terms of why we need to do these mergers. There's economies of scale. So the ability to compete with the larger overseas banks, you know, look at the 4 large Chinese lenders. The second one is on better liability management, you know, both short-term, long-term. And then it also addresses some of the unhealthy competition that even some of the PSUs have gone into. So I mean, given this whole situation that we've had with PNB, I kind of suspect it will put more pressure on the government to address things, to fix it. And the first thing that comes across is, yeah, why don't we merge the banks? The problem with that is that, even though this is a good thing, but we need to fix the plumbing first. So what if this event were to happen with, God forbid, SBI? The impact of these things also grows if it is a huge bank. So when a big bank books a huge loss or crumbles, there will be a big shock in the banking system, and its repercussions are felt everywhere. I mean, just remember the fate of the large banks that went under during the global financial crisis, and the whole argument of too big to fail. So instead of reducing the government's burden to recapitalize some of these public banks, it could actually hold them hostage to fund them or to bail them out if such a situation were to arise. So I do agree that there is need for consolidation, but only if we have proper operating controls in place, the plumbing is fixed, we have certain amount of comfort around these, then only the potential mergers would make a lot more sense than the level of comfort we have right now with these things.
Diksha, always a pleasure. Thank you so much indeed for joining us with your perspective. Diksha Gera from Bloomberg Intelligence.